Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we are now on January 29th. Hard to say that. January 29th, 2020, and we are about 4:37 p.m. Central Time. So if you look at the stock market, you go, it didn't change much, but believe me, the action during the day was all over. It was quite volatile, actually, and the market broke late in the day as Fed Chair Powell, after the Fed statement at 1, he began at 1:30 speaking Central Time. And as he kept speaking, the market started losing momentum there. And we saw the bonds and the notes pick up as you walked away with something of the impression that if the Fed made another move in the near future, it'd probably be to cut rates, not take them up. And that's because there's still a lot of headwinds out in the economy, and that's what I walked away with. He did his best to address the repo situation, and as I've been writing in my newsletter, the Fed thinks that by April, tax season and all, they'll have addressed that situation completely, and they'll tell us what they're going to do at that point in time. While the metals finished here, they were truly near the day's highs. Late in the day, the copper market is still staying weak, and that is problematic. Tomorrow we get the WHO. You know what WHO is? World Health Organization, the UN body. They're going to have another emergency meeting that we'll be able to see. It's probably going to be broadcast on TV. And the question is, are they going to declare this coronavirus a world situation, a world emergency? I personally would like it because if they do that, they can coordinate what all the different countries are doing. We've seen United Airlines stop flights to many major Chinese cities, Delta today cutting theirs in half. We've seen France, the UK, everybody's doing different things, but maybe if they coordinate, that's it. I am very interested, and you should be, on the cresting of this coronavirus. When can we expect a crest in the amount of cases and, unfortunately, deaths? And that's what you have to look at to a degree. USMCA was signed today, a very positive thing. Questions, I saw the president's advisor, and he was talking about the trade deal that he had set up with China and asked a blunt question. Is China going to get a little bit of reprieve on these tariffs given the coronavirus? He's keeping the tariffs in place, and that keeps China's foot to it. Okay, that's his call, and that's the president's call. What can you do with that? Dollar index a little lower, just a mixed day. Grain still getting no help. Another important thing today, and I do want to say that USDA is saying that there's a vaccine at hand for the African swine fever, and if it proves what it's doing in the lab, in the field, after 50 years, you might have a solution for that. Still a good thing. All right, we're looking at the weekly chart. We're down 21 points in the S&P. You haven't done any real damage, but we're certainly in a bit of a correction on the chart. All that this market has done, and I've been trying to point this out, you had a gap here. The market has filled the gap and run into resistance at that area. You see that on the chart. The swing line is bearish. You've got lower highs and lower lows. So unless the market under the current formation went right up and over 33.37, well, you'd break the bear trap. Now, a pattern rather, not trap. If you take out today's low, you're going to drop the swing line to this number, today's high, which was 32.9275. Where's the resistance? The gap and the 18-day average of closes. So that is the area that the market's probing. Where could support be if the market decides to drop down? I'd be looking at the Bollinger Band at 32.21. Resistance right through here. I've given you the number on this formation, at least the one I'm seeing, that could break the pattern that's bearish, and momentum is down. So I have bias down, swing line down, momentum down. This market's in a downtrend at this point with the possibility that it wants to challenge the lower Bollinger Band. In the NASDAQ, you went up, filled the gaps. You're running out of momentum. Difference here, you have a higher high and a lower low. It didn't help to see Facebook get the heck beat out of it late in the day today, as the question there isn't their earnings. That's not the issue. It's new users that are coming on. That's how the analysts at least are saying. Tesla took off in the aftermarket, though, beautifully. In any case, 18-day average could be where the market just wants to fight a battle at this point. To turn the trend down, because nothing here can turn it up on this pattern, if you take out today's low and close under 90.4875, you would then have the lower swing lines. You already have the lower low. That would give you the lower high under the 18-day average, and momentum's already pointing to the downside. In the Dow, you filled the gap. If you come back here, you can see the gap from this day, and that was a low of 28,796. Next day, 28,732. So you had to get up in there and watch. You got up, fill the gap, and that's where you ran out of momentum. Trend is still down as I'm viewing it. To take this market out of the downtrend you got to get over 29,241, that high. And again, if the market decides to break from here, the possibilities you go back to the lower Bollinger Band for your first support. Momentum down, bias down, trend down. When we come to the Russell, not even enough strength to get to the 18-day average. The only good thing I see on the chart is it's oversold already. Otherwise, still in a downtrend. Hit the downside target in a very feeble rally in this market. In the VIX, not much of a break. Couldn't even make it to the 100-day average. Now, where are we in a trend? We're up. We have higher lows, higher highs. I think after the WHO announcement tomorrow, the markets are either going to breathe a sigh of relief or they're going to get real scared. I think you have to wait and see what that does. CDC may follow through with something after that. You don't know. But this VIX has taken on, as you can see, an increased number in it, probably fear from this. Bonds. In the bonds, you're running the upper Bollinger Band. So what you're doing is you're backing off. You have a day's over. Then you're backing off to the market, getting to 161.10 on a close, just under the upper band at 161.15. And today you added more pressure. The market trying to develop now, or did it develop, the embedded reading? Both numbers are over 80. Both over 80, yeah, you've got your embedded reading. So when and if the red line turns down, that might be a sign that the market wants to back off towards this support area of 158.29 to 22. Until then, guess what? It's not something I think a lot of traders thought, but interest rates continue to fall. And in the 10-year, if you saw the moves today, rather dramatic, you finished under 159, just a hair under it. That's a pretty low number, though. And are we going to get back up to this area? The October numbers are what traders are asking. I keep watching it, watching what Rick Santelli says. He's a friend of mine. I see him on the floor a lot. I haven't seen him this week. I think I'll be on Fox tomorrow or the day after. And when I'm down on the floor, our studios are closed, so I generally bump into him. I'll find out what he's saying. You're getting a bullish crossover possibility. The 18-day average is 129.17. The 100 is 129.18. I told you, keep your eye on that. A lot of traders follow crossover plays. This market has not shown anything that is bearish on it at this point. It's still very much bullish, except it's overbought. It is not embedded like the bonds are. In the dollar index, you're at a resistance point. First time you hit the Bollinger Band, and I'll pull back here, you hadn't hit it. That was Monday. You hit it Tuesday, and you've gone into a stall. I'd expect that. That's your resistance. However, you still have the embedded reading. Until this red line closes under 80, I'd be concerned. This market, not concerned if you're bullish. I'd be concerned that the dollar wants to keep going higher. And I think, again, tomorrow that the World Health Organization might help set this market what it is. But look at how the 18 and the 100-day average are coming together. I don't know many traders that thought the dollar was going to be this strong in the beginning of the year, and yet here we are. In the eurocurrency, look at how weak this is. It runs the lower Bollinger Band. It pulls to the right-hand side. You had a reversal day today, but what rules the market isn't the chart. It's the momentum. And as long as you keep that bearish embedded reading, I think the pros are willing sellers on the rallies in this market. In the British pound tomorrow, you get the Bank of England monetary policy. It's also the last meeting of the Bank of England, where Mark Carney will be the head governor. So you want to keep your eye on that. What are they going to do? A lot of people think that there's enough reason for the bank to lower rates. Don't know. Don't want to guess on it. You've already got momentum still down. You've got a higher high, lower low, and you're into support at the Bollinger Band. If that gives ground, because they cut rates, and maybe they'll consider that on a currency basis weakness, well, maybe you get to 128.82, the 100-day average. If the market decides to rally, the resistance is 130.88. Japanese yen just pulling back for support at the 18-day average. We talk about that so often. The momentum is up, the trend is up, the bias is up. A lot's going to depend on what the World Health Organization says tomorrow. If the market takes off, the resistance 92.74 to 75. In Bitcoin, you're coming up to the resistance point. As I've said, this market's been staying since almost the beginning of the year over that 18-day average as the bulls have stepped in because of what they call the halving. Come April, May, what happens is the algorithms make it, for all the energy you're putting in to build a Bitcoin for the miners, all that same energy, you only get a half of the amount that you did prior to then. It's called halving, and there's a lot of money that has moved in thinking you're going to get a big move. I don't know if they're right or wrong. I'm moving over so that we get more current trading in the April Brent versus the April WTI. And as you can see, this market's just sort of sitting here at a differential of 547. When we look at April Brent, you can see the trend is still getting beaten up. And the interesting thing today, there's a large cargo ship of oil that was we don't know if it was a missile attack, a bomb, whatever, a big fire right off the coast of the UAE. The U.S. Navy says it's monitoring it. Don't know. We saw an attack on Saudi oil fields today. The Saudis say, and I don't have any pictures to know yes or no, that their missiles took down whatever the attack was. Again, don't know. But mischief is there, and yet you're not able to rally the oil. That gives you an idea of the bear play that it's work. And what's at work on this is even with OPEC saying, and today the head of Algeria, their energy minister, said that he is in favor of maybe moving, instead of waiting for March, to move a meeting to February, right in front of us, where they discuss cutting oil production even further. I don't know who they are. Generally, it's the Saudis that do most of the cutting, so we'll see if there's anything to that. Yet it's not having a bullish impact. And the reason? The coronavirus. Everybody's scared that if the factories don't reopen for whatever reason in China, any oil's too much oil. Make it better, and you're obviously quite cheap. As I've mentioned to you before, if we look at our oil here and we go back on these charts, you're in a support zone. Support zones doesn't mean you're bullish. Again, the pattern has been one of a straight down decline where you've come from nearly $60 to as low as $52.16. You've gone here from roughly $65 down to $57.33. So these are vertical drops that just, boom, happen all of a sudden in the market, and it's been staying under the 18-day average of closes, as you can see, for a good part of the beginning of the year. Same thing here in the WTI. Then we get to the gasoline. I have my first sign. This is what I've been waiting for. The gasoline is bottoming. Now, this is not a bullish picture yet. You've got lower highs, lower lows. Here's the sign. When you lose the embedded reading, often price and the closest of the main moving averages, be it the 100 or the 18, they try to come together. If you can keep that from dropping tomorrow, and again, you've got the WHO announcement, but if this market stays that it doesn't embed until you take out 144.49, this fits in to the time frame when I had put out my gasoline report about 2.5 weeks ago. This is the event I was looking for. No, I'm not throwing out, I don't say here, you buy, you sell. This is the event where the bearishness is ending. Now the question is, does this start that seasonal move to the upside? Nat gas, still bearish. The weather's absolutely phenomenal. I mean, we get a little snow, but we're up in the 40s in the Midwest. That weather is moving obviously east, northeast, and it's keeping the demand for this still extremely low. Each day that goes by, you're not going to make up the demand. it's another day of winter disappearing on you. And I'm not the one saying this, the trade sees it. Now, if you get a cold spell out of nowhere, yeah, you can get a rally back to the 18-day average, but the bears have total control of this market. To me, the question is, how low does the market want to go? Not on rallies, how high at this point in time. You can see the board's cleared, but I haven't cleared. You do know I'm putting out my spider and my ETF video every afternoon. It's already posted on the website. I try to record them at 3:30 and get them out. They're very similar to what I do in my morning futures video. The idea is to give you charting confidence. And what you see on YouTube, believe me, folks, it's half of what I do at the afternoon or the morning futures video. Why? Because in these, first I'm going to cover 40 charts on the futures. I'm going to cover about 20, maybe more, on the SPDR ETF. I'm going to give you technical analysis, touch of the fundamentals with it, entry points, exit points, where I think the market is going. And I do that in all these markets. First of all, I have a good time doing it. But second, I like it. I really don't look at the name of the chart. I look at patterns all the time. So the question for you is your own confidence. And here's the idea. You wake up. I've already recorded. I typically start recording before 6 a.m. My video in the morning futures is posted ideally by 6:30 or so in the morning. I know that at that point you've got what you need to start your day. I've already read the news reports out of China, the rest of Asia, Europe, looking at what's going on. I'll give you what the take is. And I do put down in writing what it is in headlines so you get an idea. In the futures one, I will cover everything in this exact order, and I do them a little different. The order will be there, though, you'll see on the SPDR one, and you get a crossbar. In other words, a bar that you pull at the bottom, and it lights up. It tells you what section of the market you're in, so you don't have to watch everything else. For the time being, I am combining and giving away free my SPDR ETF video with my futures video, as this is brand new and I want people to get comfortable with it. That's going to end. I make you a promise. That's going to end. But for the time being, the introductory price to get both of these, $7.95 for the first 30 days, and everybody that has already been a paid subscriber, you know I'm giving this away to you free on the SPDR one, so you can't say you're not getting it. After that, it's $15 for the morning subscriber video, or you can go on a one-year subscription. We'll probably do something very similar when we start charging for the SPDR ones. How do you find out more? Go to our website. Under the word research, it explains it, and away you go. With that, I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.